Where does Peter see gold this week? Stay tuned for Pete's sake. Peter, nice to see you again.
Nice to see you, Daniela.
Peter, almost didn't recognize you with that lip action happening.
Yeah, we have a bunch of guys every November that grow caterpillars on their upper lip for to raise money for prostate cancer and mental illness for men. It's a little uncomfortable, but I'm going along with the flow this month.
Fantastic cause, Peter, and I look forward to that caterpillar transforming into a butterfly.
Yeah, I do as well.
So, Peter, last time we spoke, you said you saw gold as a buying opportunity at $16.78, silver $31.20. We've rallied since then. It's post-election. How do you see the markets poised now?
Well, I like the gold market at $16.78, and I suggested buying it. Silver, as if I remember correctly, I was a little nervous because it had broken through 31.20, but when it went back up and closed over 31.20, I entered into a position. Normally, I would have traded out of this position, but I'm still long both positions, and it feels to me like there's an underlying bullish current coming, and it could take the metals considerably higher between now and year end. I've got a stop in on gold at 17.12 on a close basis, and silver I'm going to keep unless it does break 31.20 on a close. I have the sense that we may see gold in the short term, probably by year end, test the highs of last year. I'm looking for the high 1800s before mid December, and I'm looking for silver in the 35 to 37 range in that same time frame.
Peter, I was speaking to Vince Lancy, fellow analyst, yesterday actually, and he was telling me he's still sticking to 1900 gold before year end. And my question to him was, well, you don't see $150, $200 rise basically as a problem?
Well, I wouldn't say no problem. I mean, I think there are things that could stand in the way of that rise. But looking at everything that I'm looking at, when you look at the both, again, I know this sounds like a broken record, but if you continue to look at the Fed and what the Europeans are doing, they continue to be accommodative. I think many people have just ignored what the potential problem is in the Middle East as well. Not suggesting that something is going to happen before the end of the year, but Iran is not going to go away. At least it doesn't appear like they're going to go away. And I don't think Israel is going to wait, until midsummer next year. So that's in the background. I mean, when you look at all of the issues that are potentially bullish for the metals, they, in my opinion, far outweigh being bearish this market.
Just on that note, Peter, news coming out today that the U.S. is set to overtake Saudi Arabia's oil output by 2020.
I've seen the news, and yes, I mean, I think that news is old news. The U.S. has always had the ability, if they tapped some of their reserves offshore, and certainly in Alaska, and obviously in recent times come to more of an agreement with the Canadians on the pipeline, that the U.S. could be self-sufficient for their energy needs. Those stories have been around since the 80s.
Right, Peter, I brought it up because, as we know, oil and gold, so closely correlated, tend to rise in tandem. So I was just thinking what impact that might have on the gold market, if any. Yeah,
they could. But I mean, they're talking about independence in the year 2035. I mean, oil is a very short-term trading barometer of world's demand and supply, and also Mideast tensions. And I think if you're in the camp that we can get some resolution on the fiscal cliff by at least even delaying the tax increases for 6 months, and if you look at the potential issues that may occur in the Middle East with Iran and Israel, I would be very, very nervous being short the oil market in the low 80s. I'm not suggesting it couldn't go into the 70s, but I'd be a buyer there. In 2035, I'll look at it if I'm still around to determine whether or not I'd want to be long gold.
Peter, you said the magic words, fiscal cliff. There might be a resolution this week. There's a meeting on it. What might we see happen?
I think there'll be some compromise. There's certainly, in my opinion, not enough time to revamp the U.S. tax code. I think the best scenario that I'm planning for is that there will be some type of agreement to extend the fiscal cliff for 3 to 6 months. And then I think the electorate has spoken, and they want both sides of the aisle to come together and do something.
So, Peter, a kick the can down the road scenario?
Well, at least until there's absolutely, in my opinion, no way they can get this done in 30 days or 45 days between now and Christmas. So I do think that they will kick the can down the road, and they will come out based on the U.S. electorate indicating that they want this to happen, and come up and say, look, we're going to work on this in the new year, and we're going to have a plan by, and pick a date, 6 months, 3 months from now. And I do think they will work along those lines.
All right, Peter, let's wrap it up for this week. New numbers you're looking at for gold and silver. I'm
looking for silver to break above 33, and I'm looking for gold to at least test 1750 if we can get through it, 1780-ish range. On the downside, my stop loss is at 1712 on a close basis for gold and 3120 on a stop loss for silver. I don't think we'll see the downside this week, though.
Also this week, Peter, it's Diwali in India, a key festival for buying gold, so we'll be paying attention to that.
Yeah, and I think the demand for gold in India will be less than it was in previous cycles, but there'll still be some offtake on the market. I think this is a market where people are worried, and the fear factor is now coming more into play than has been the case for the past 2 months, where the market's traded more against the dollar, as opposed to trading with a fear factor. I think that is in the market, probably will stay in the market till about mid-December, and I think that's price positive for the metals.
Peter, thanks so much for your thoughts this week. We'll see you soon.
Okay, see you again. Thank you.
And thanks for watching this edition of For Pete's Sake. You can email me at newsfeedback@kitco.com, or better yet, tweet me at Daniela Cambone. Thanks for watching.